Well, good morning, everyone, and welcome to this latest in a series of webinars organized and produced by the Allegheny Conference on Community Development. This morning's session is small business focused on the COVID-19 financial assistance that's being made available and the options that are available for small businesses across our region. My name's Bill Flanagan. I'm Chief Corporate Relations Officer for the Allegheny Conference. I also host our region's business on Channel 11, Sunday mornings at 11. And we're using every channel at our disposal at the Allegheny Conference to try to help get information to businesses of all sizes across our region to help them sustain their operations and their viability so that as the crisis ends and we all begin to recover and get back toward normal, as many of the businesses across our region will be able to participate in that as possible, and so that as many people in our region will have jobs to go back to once the crisis is over. This is actually the second in a series of webinars that the conference is hosting to help businesses navigate through these uncertain times and to enable all of us to work better together. Our focus today is on the federal stimulus CARES Act, and in particular the Paycheck Protection Program, which is the $350 billion portion of the CARES Act. It's really devoted to small businesses, but also to nonprofits, to self-employed people, and independent contractors. Before we begin, we'd like to thank our sponsors for helping to make this entire series and much of our special programming during the crisis possible. These include Peoples, Giant Eagle, Highmark, and UPMC Health Plan. They've really helped to provide the capacity required to deliver this information to our members and our partners and stakeholders all across the 10 counties of southwestern Pennsylvania. Today, you're going to hear from two financial institutions that are really at the heart of helping small businesses cope and get access to capital. And we know that many of you participating in the webinar today are either a small business struggling to stay afloat and move forward during the crisis, or you're part of an organization that's geared toward helping small businesses in your community. We hope the webinars will provide relevant, timely, and useful information for you. Now, as participants, we have muted your microphones to give our speakers the spotlight. During the remarks, please feel free to submit questions via the Q&A feature that you'll find at the bottom of your webinar screen. And we'll address the Q&A, all your questions, and hopefully many of your questions, as many as we have time for, during the second half of today's webinar. So to begin, it's my great pleasure to introduce Mike Amon, who is Senior Vice President and Managing Director of First National Bank's Small Business Finance. Mike, thanks for joining us.
Thanks for allowing me the opportunity to speak to the group here. So the last several days have been really busy for everybody here with all the different programs, and as many of us are trying to figure out how everything works and what have you, but I think we have put together some pretty good information. Literally had changes being made to the Paycheck Protection Program last night that I've tried to incorporate into the slides here. So you should have the latest and greatest, but we still have some training going on later today, and it's a bit fluid right now. First National Bank, first slide here, just tell you who we are here, headquartered in Pittsburgh, but obviously have holdings in several states, including down into the Carolinas. I'll let you look at that at your leisure here, but if we go on to the next page, we'll get right into this for you. So the CARES Act has got kind of three components to it, and I'll hit on all these that were all out there, each with individual funding. There also is the opportunity to get payment deferrals directly from your bank. I'll hit on that. And then a number of you I know have maybe already applied for the disaster programs that have been out since maybe the middle of March, and we'll hit on that as well. So let's go on to the next page. We'll get right into the Paycheck Protection Program. So you'll see the red disclaimer at the top, just because this is very much in flux. I think we got it pretty well nailed, but as I said, there's some training later on today. Just understand that this is different from the disaster program in that this is going to be delivered by the banks. The disaster program is directly through the SBA. The criteria are really pretty simple. You have to have been in business on February 15th paying wages, and you can't have any more than 500 employees. It does allow for self-employed individuals or small-sized companies set up as sole proprietors, independent contractors. It also allows for not-for-profit. So just be aware that it is much, much broader than your typical 7A program. But really, those are the two main measures. So go on to the next slide here, and we'll talk about the amount here. So you're allowed, this is all kind of based on payroll. The whole intent of the program is to allow companies out there to get additional working capital in order to continue to operate, but is really kind of the crux of this thing. The most focus has been on retaining employees and having the funds to pay them. So the sizing of how much can you borrow is simply what is your average payroll been, and the measurement, by the way, on that is going to be whatever it was in 2019. If you apply for this, you'll be asked to come up with a bit of a worksheet and some documentation just to show what you had in each of the months and determine what your average was, and then we're simply going to multiply that times 2.5. Think about that as if we're lucky with the coronavirus kind of running its course here, into the end of May or early June. The intent is hopefully everybody's starting to get back on their feet, but that's sort of the sizing perspective there. One hitch on this is none of the employees whose income is greater than 100 can you count the amount over 100, but you can count the first 100,000 in that. Third bullet down there is about the proceeds. So the first comment was, how much do you get? And it's based on payroll, but the use of the funds can be for payroll, but it also can be for rent, utilities, interest on your mortgage. But the hitch there is that you can't use more than 25% of the loan proceeds for the non-payroll part of that. Probably didn't word that correctly, but you can use it for 100% for payroll, but you can't use the non-payroll pieces for more than 25%. And the use of the funds have to be deployed before the end of June. A couple of features here that are different from a normal 7A that are clearly to your advantage as a business owner. There are no fees, whether it's the SBA or the bank, no prepayment penalties on these. There's no collateral, no personal guarantee. We'll go on to the next page. I think the credit elsewhere is more of a kind of a bank thing there. But there is a good faith estimate or certification that each of you are going to be asked to make. I have the application form here in my hands and have looked over it quite a bit over the last few days. They did make some tweaks to this last night, but essentially the burden is on the business owner to supply the information to sort of document how you're arriving at your estimate for your loan amount. And you have to certify that you're going to use the money appropriately as the program intended. It's all written on the application. You'll see it when you get to that. Another feature here that is going to work great for you is that there are no payments on this loan for the first 6 months. It's not just interest only. It's no payments at all. And the other feature at the bottom there is forgiveness. So you have the ability to get ideally all of the loan forgiven after the end of the second quarter. It may linger later into the summer before we're starting to work that part of the process, but you literally can have all of it forgiven if you used it for what it was intended, which again is the payroll, rent, or utilities, et cetera. If by chance you did not use it that way, or if there has been a reduction in your employee base, there had been a provision in it that you're allowed to have some reduction just on the basis that maybe some of you needed to do that already. That is built in there, that is probably okay. But this is some of the area where we're waiting for more clarity coming from the SBA on the mechanics of how we actually measure that. If we go on to the next page, they have listed there that you have the ability to rehire anybody that you laid off already. It would not be unusual here if, because of what's already happened to many of you, you've already let go of some people. If you rehire them before the end of June, you actually, that works to your advantage. So let's say, for example, you had 10 employees as your average for 2019, and now you're down to 8. If you rehired those 2 back, you'd be right back at the 10. But keep in mind, there is a provision that there's some expectation that you probably maybe you're going to have a few less now than you did last year. So what you need to do simply is keep track of how you use the money, and that will later be requested by the bank in order to put forth your request for the forgiveness. But just keep track of how you used it, whether that's canceled checks or otherwise, and that will be the type of documentation you need. A couple of notes on there. You are going to not be taxed on the forgiveness. It's not going to be viewed as income. And it is actually considered canceled indebtedness, which I think is really important. If for whatever reason there's some portion of the loan that is not forgiven, then the bank would just simply term that out over the remaining term. The term on these things is 2 years from the start. So if we're, 3, 4, 5, 6 months into this when we start this process, we'll probably leave you another, let's say 18 months for the term out feature. The rate on the loan is really, really low. I think it's 1%. So the payment would be fairly light. We're going to the next page here. We wanted to get into the disaster program. I'm not going to hit on this in any great detail because I think most of you are going to find that the Payment Protection Program is more to your advantage. This is the program, you'll see a link at the bottom where you would actually apply directly through the SBA in Washington. They've been receiving these requests since earlier in the month. Pretty nice program. It's a little broader in terms of its use than the Payment Protection Program. You can use it for other things like inventory and things that weren't described in the Payment Protection Program. It is a loan. It does tend to have a personal guarantee and collateral. But if you go on to the next page, there's a pretty neat feature that they just added to it. And then some clarification last night that came out, and I kind of bolded it there, the second bullet. And that is that you have the ability in an EIDL, which by the way means economic injury disaster loan, to get an advance on that of $10,000. So, you may have asked for $100,000 and it takes the SBA probably a month or so to process this and get the loan to you, but you can actually get an immediate advance of $10,000 there. With the CARES Act that came out last Friday, they added another, I think it was $10 billion in funding specifically for this advance. But if you had applied prior to last Friday, you got to go back in and apply again. They've created a new short form for this for you to get the $10,000 advance. It's pretty quick that you'll get the money, and the proceeds of that can be rolled into the Paycheck Protection Program. In fact, something that they just came out with last night was that if you already have one of these disaster loans, you actually can roll the balance that you have already drawn on that into the Paycheck Protection Program and ultimately later have it forgiven. So something to keep in mind if you've already done that. The only hitch is that you can't have already used the money for payroll and then turn around and get a Paycheck Protection Program loan and use it for the exact same payroll. So basically a double dip. They're just trying to prevent you from double dipping. So we're going to the next page. I think we're just going to skip through most of the rest of this on the disaster loan. If you would go on to maybe the next page here, I'm going to let you guys read that on your own. I want to touch on the payment deferrals. Every one of you, I'm sure, has a bank that you deal with already, where you are already maybe borrowing money, or maybe you just keep your deposits. But I want you to know that every bank out there, I'm sure, as ours is, has come up with some solutions to try to help businesses in any way we can. And on the consumer side, which obviously affects not only the business owner as an individual, but I would pass this on to your employees, they ought to be able to call their bank and get their payments deferred. I call it on here skip a payment. Our bank is offering 1, 2, or 3 months deferrals there. And that's true for mortgages, home equities, auto loans, credit cards, et cetera. Really, really helpful to kind of free up some cash flow. On the business side, if you just have a conventional kind of non-SBA loan, I know the banks also are either allowing interest only for 3 months, or they actually have full payment deferrals available as well. From the SBA side, if you happen to have an SBA loan, The CARES Act had another $17 billion that they added last Friday there, where the SBA is actually going to make your payment for you for the next 6 months. So you don't have to do a thing. Your bank will probably give you some kind of a notification that this is happening behind the scenes. If you've already gotten a deferment on an SBA loan, you can certainly keep that. And then you will still get an additional 6 months of the payments made for you by the SBA. So really, really nice option that was just added. And the last one on here is suppliers. I would encourage you to reach out to them, see if you can get some extended terms. They may not all want to do that, but the reality is that you probably have lower revenues than you had. Your product may be still sitting there on the shelf, and you'll pay them as soon as you pick up again. Obviously, I don't control any of that, but I know that I've heard that suppliers are willing to renegotiate your terms. And then the next page, I think, is just some information about us as a bank. Again, if you would go to that. Again, I would just encourage you to talk to your bank. Most banks that offer SBA loans can take care of your application for a Payment Protection Program loan. I would just tell you that it may or may not be live today. The actual training, as I said earlier, starts today for all the banks, so we don't even have all the procedures figured out yet. We have a pretty good idea of what it's going to be, but we don't have all the, to the nth degree that we would normally want. But so just be cautious that there may be a lot of information out there. There's probably an application out there, but nobody can really start the process probably until Monday just to kind of get their ducks in a row. But if you want to go out to our website, even if you're not a customer of ours, we have a lot of information out there that would probably help you, including maybe a list of things to start gathering. Most of that is focused on payroll, just to kind of gather your records so you can put forth an application. So that's really all I have. I would just, we've got a Q&A later, but appreciate the time and stay safe, everybody. Back to you, Bill.
Mike, thank you so much. I mean, this really is unprecedented. In your career, can you remember any time when the financial services industry, as well as the government, has had to work in this way to figure this out as quickly as they're trying to do it?
Not at all. Clearly, back in the last recession, there were programs, and I think we did it as well back in, following 9/11. But this one is substantially higher than it's ever been, much more broader in terms of who they're trying to cover. And the window from start to finish is really, really fast here. Unprecedented is a great word for it.
Yeah, well, it's a testament to everybody to try to work their way through it. And it's hard, given the sense of urgency that so many small businesses are facing, to tell them to have a little patience over the next few days. But it sounds like you have to find a way to balance that sense of urgency with the patience that's going to be required to make sure the money can move.
Absolutely.
All right, Mike, thank you so much. Now we're going to move on to Madia, who is the Chief Strategy and Development Officer at Bridgeway Capital. For those of you who don't know Bridgeway, the organization does really important work across our region, helping to sustain communities by providing flexible capital and growth opportunities that are really targeted at businesses and communities that have historically been left behind. That work becomes even more important during a financial crisis like this, when the organizations that presumably are a little more on the bubble to begin with are threatened even more by the kind of crisis that's unfolding. So we're really fortunate to have Bridgeway part of this conversation. And with that, I'm going to turn it over to Madia.
Thank you, Bill, and good morning, everyone. Hope everyone is staying healthy and doing as well as you can be under the circumstances. As Bill said, my name is Madia. I'm with Bridgeway Capital. And to give you a little bit more background on Bridgeway and who we are, next slide, please. So we're a nonprofit. We are a 501c3 community development financial institution. CDFI is our acronym. And as Bill said, we are really focused on small business lending. We also make loans to nonprofits and to real estate developers, sort of community-minded real estate developers. But small business is our bread and butter. And we are really working with a lot of the businesses that felt this crisis most acutely and most quickly. Main Street businesses, restaurants, hair salons, daycares, coffee shops. So they were in some ways the canaries in the coal mine for what the business closure order and all the resulting social distancing has meant for the business community. Additionally, we work in communities and with people who are under-resourced. So we've got a lot of clients who don't necessarily have large net worths to fall back on, not a lot of large retirement accounts. Maybe they don't have home equity, tend to be located in low-income communities where there isn't a lot of excess cash flow, a lot of disposable income to begin with. So again, we really feel, I think, the pain of what a lot of folks are going to. And so I commend the conference here for introducing the concept of inclusivity into this discussion. The coronavirus does not discriminate. It does not discriminate by race. It does not discriminate by gender. It does not discriminate by socioeconomic status. And so I think it's really up to us, all of us working together to make sure that the solutions, both the health solutions and the economic solutions, are equitable and inclusive and don't leave anyone or any community behind. So on that note, next slide, please. Talk a little bit about what Bridgeway has been doing thus far. So we tried to get this mobilized pretty quickly over the last couple weeks. We do have a emergency small business loan offering that you can see described here, loans up to $50,000 or half of 3 months worth of operating expenses. And who's eligible for this? The very small end of the small business spectrum. Under 50 employees, often we're working with businesses that maybe only have 1 or 2 or 5 or 10 employees, under $500,000 in annual revenue, under $100,000 in net worth for the owner. And then we, as we do in all of our lending, placing an emphasis on minority person-owned businesses, woman-owned businesses, immigrant and veteran-owned businesses, or businesses in those low-income communities that I talked about. What our approach here is really, I think, optimistically hoping that this only lasts, the worst part of this disruption lasts about 3 months. Seems like a lot of the programs that are being rolled out are taking a 3 to 6 month time frame. So the way we've structured the loan is no payment for 3 months. So it's no interest, no payment whatsoever. That's hopefully gonna weather, help your business weather the worst part of this storm. That's followed by a 12-month interest-only period at a 4% rate of interest. So maybe 12 months, spend some time rebuilding your client base, getting back on your feet, and then it turns into a 5-year sort of typical term loan. So hopefully by 15 months, you're really, really thriving again. We obviously have no idea how long any of this is going to last. We'll reevaluate as we go along, but that's how the offering was designed and sort of how it works here. A note on how this all interacts with the Paycheck Protection Program. We are not eligible to make PPP loans. We're disappointed with that. That was something we found out overnight. SBA and Treasury, we believe, could have very easily included CDFIs in the program, made us automatically eligible as they have with other financial institutions. They chose not to. It's unfortunate. I think it will mean that this program isn't equitable, doesn't reach the people in the communities that it otherwise could, because we think we're really well positioned to serve those places. That being said, nothing we can do about that in the next couple of days here. We'll continue to have this loan offering described here. It is not as favorable as a PPP loan. We certainly recognize that. So my advice is go to FNB, go to your banking partner, talk to them about the PPP loan, try to find out what you need to do to get that, but also stay in contact with Bridgeway or with other mission-driven lenders that you might have a relationship with to find out what's going on. And as I think was very clear in Mike's comments, this whole situation is fluid, right? And so every time I think that I've got the program figured out or the latest figured out, something changes. And so we don't, I don't think any of us should assume that we always have the most up-to-date knowledge. So communication is really the one certainty in all this that I think will give you maybe a little bit more confidence and open up some additional opportunities for you. Similarly, like F&B and like a lot of lenders, we are offering payment deferrals for all of our existing customers that have been impacted by this. That goes for both SBA loans and non-SBA loans. If you are a Bridgeway customer, please contact us, contact your loan officer if you need a payment deferral. If you don't know who your loan officer is, contact me. My contact information is available here. Next slide, please. So what else are we doing here? We are trying to also take a more proactive approach with a lot of our clients, either existing or potential clients, to really use this as an opportunity to think about what you can be doing better or how you can build more resiliency in your business. So a few things we're offering here. You can reach out to us for one-on-one technical assistance. Usually we would do that in person, of course. We won't be doing that now, but we can find ways through conference calls or Zoom meetings to get you set up with marketing consultants, accountants, lawyers, if you need help trying to figure out what you are or are not allowed to do during a business closure order. We're happy to provide that kind of assistance. There's also a lot of other resource providers out there. There are a lot of people trying to help right now, a lot of people who want to help. We've got this page on our website with links to everything we know about a lot of the SBDCs, like the Pitt Institute for Entrepreneurial Excellence, doing a lot of great work, offering a lot of webinars right now. So would encourage you to keep your eyes and ears open there. And then Bridgeway is also offering its own webinar series that we're in the midst of here. You go to the next slide, please. So our webinar series is mostly focused on digital marketing. How can you improve your online presence and your digital footprint? Starting, we're in the middle of a two-part series on strategies for restaurants. I think we all are aware that restaurants were among the first and hardest hit businesses during this crisis. And so we had the first one yesterday that will be recorded and made available on our website in the near future here. Another one today at noon. Next week, we'll have a session on setting up your web store. If you have products that you are able to offer online, we'll provide you some tips and strategies for improving and hopefully driving up your revenue there. And then a broader look at digital advertising strategy. How can you make better use of social media, make better use of search engine optimization to just get your products and your services out there in this time when everybody is stuck at home. We also have specific webinars for creative businesses through our Creative Business Accelerator. We have one of these that's already passed, another one coming up today on understanding emergency capital options if you're a creative business, which is a specific segment of the economy that Bridgeway focuses on. So again, thanks for the opportunity. Thanks to everyone for listening today, and happy to answer any questions.
And Matt, thank you very much. Really appreciate it. I'm struck by the fact that your type of organization's been excluded from providing the payroll protection loans. I would think many of your customers are your customers because they don't have a traditional banking relationship. So what are you telling them if you think they really should be pursuing these loan opportunities? What do they do if they fall into that gray area?
Yeah, it's a really difficult position for them to be in and for us to be in, quite frankly. Look, this is a great program. It's a potentially really high impact loan. The issue here is that a lot of the businesses we work with, and I think a lot of the folks probably out there listening today, are pretty small, and they don't have a full-time staff accountant or accounting department that can pull together last year's payroll data in the blink of an eye and get it out to a bank. And this is a first come, first served program. So speed is important here. The best advice I can give is again, stay in touch with us. We do have, as I said, some accounting help, some legal help. We can try to help you put these packages together to get to your bank. We have relationships with banks. And so if you're a Bridgeway customer, we can help sort of vouch for you, get your information over to the bank. But you've got to act quickly. You've got to get the paperwork that they're requiring together. You don't want to sleep on this opportunity. It's a good one. But again, the best thing I can say is stay in touch with us and your bank, and let's try to figure this out.
Okay, time is up. Sure. Yeah, so with that, I think we'd like to be able to take questions from those of you who have joined us for this webinar. And to help facilitate that process, I'm going to turn things over to my colleague at the Allegheny Conference, Allison Treaster. Allison.
Hi, everyone. First of all, thanks very much for submitting questions through email and also throughout this session. Just to let everyone know, we have a lot of questions to get through, so we will do our best to answer everyone's. And if not, we're planning to put together an FAQ document and hopefully get in touch with all of your needs following this process. So I think we'll start a lot of questions about 1099s and contractors and how they fit into the mix. So if you can start by talking about how those contractors fit into the payment process and whether or not they can be included in the payroll. Another question was, if my 1099 employees apply for unemployment and I apply for PPP, is that double dipping, and how do we control that?
All right, let me take a shot at that. So independent contractors, there are certainly companies out there that have employees and they have independent contractors. So this just got clarified last night, so this is really very timely. The company would not include the independent contractors on their loan request or in terms of determining their payroll. They would just leave that with their employees. The independent contractor, though, is certainly eligible, and they would just simply apply on their own. So the question would be, okay, well, what do they provide? Well, they should be able to, I believe, I could be off on what the name of this thing's called, but it's, I believe it's called a 1099 MISC, as in miscellaneous. It's probably some kind of a quarterly tax withholding form that you would be submitting quarterly anyway. So that would be an example of a document you could provide. I also am aware that in the case of a sole proprietorship, Schedule C on your 1040, there's, you know, you may have taken some wages for yourself, but you may have just been taking draws. But at the very bottom, obviously, you've got, hey, here's what my net profit was. And read that specifically last night that you can actually use that as the amount of income that you had. And, you know, we would just divide it by 12. So hopefully we handle that situation. Help me here, Allison. Did I miss one of your questions?
No, I think that covered it. A follow-up on that is, if our workers have filed for unemployment or we don't have employee expenses that we're looking to cover, can PPP be used for things like rent, utilities? In the case of a business that has vehicles, can auto insurance payments be included in those?
Well, first off, if somebody's already on unemployment, if you are a business and you're looking to, you know, apply for the Paycheck Protection Program, if that employee was on the payroll in, say, 2019, and they're included in your baseline, and then in terms of how you use the money, use the proceeds, if you don't rehire them, then obviously the money is just going to go towards your other employees. If you do rehire them, then obviously you can pay them, you know, like you would ordinarily, and that rehiring actually works to your advantage in your forgiveness part of the equation. But if you don't hire them back and you know, call it extra money left over, yeah, absolutely, you can pay rent, you can pay utilities. If you don't rent but you own the building and you have a mortgage, you can pay the interest portion of the mortgage but not the principal portion. You could use the money for other things, but just understand if you do that, it will not be forgivable. That portion would not be forgivable.
Okay, great. Also, a lot of questions about self-employed. What are they eligible to apply for? How can they get access to pay themselves if they're not paying employees? If they have to do estimates for payroll based on profit margins for the previous month, how do they estimate those?
Yeah, that would be very similar to just the way I responded at the beginning about independent contractors. So self-employed, you're going to use whatever documentation you have. It may well be, a tax return. I don't know if you would have had your 19s filed yet, but you may well have a year-end compilation that you did, so you know how much income you did make. The banks will take whatever you've provided, because your situation is more unique than the traditional sub-S or C corporation that we'd be dealing with.
And then along those same lines, this is a bit more technical. If they file Schedule C, should the application be completed as a company or an individual?
The loan is actually to the business. Now, obviously, if you're sole proprietorship, the way that works is you're technically a DBA or doing business as, so the loan would be to you as an individual, perhaps with the DBA added to the legal name. But if you're a C corporation or S corporation or partnership, the loan would be to the business entity itself. As again, I think I said this when I described it, there's no personal guarantee. You're not also personally signing on a promissory note. I do believe you have to personally execute as an officer of the corporation, but these loans are not intended for individuals other than for those that are sole proprietorships or independent contractors.
A lot of questions around whether or not you're allowed to apply for the EIDL $10,000 grant and PPP. And what people are hearing is that you can no longer apply for both as of this morning. So a few folks have applied for the EIDL as of last week and are wondering if they're able to apply for PPE or PPP if they haven't yet.
Right, they haven't received the proceeds yet. Yes, you can actually refuse it. Let me start with the $10,000. If you've already taken the $10,000, that's okay, because I think there's a provision in the EIDL loan that even if you got declined by the SBA, which I wouldn't think would happen, but if you did, you're allowed to keep the $10,000 anyway. But the $10,000 can be rolled into the PPP loan. Clearly, as I said earlier, the EIDL was set up as a loan that you actually personally guarantee and pledge collateral and have to repay back over, I think it's a 30-year period, where the PPP loan is actually forgivable. So clearly most business owners are going to want to go with the PPP loan program now that it's out. And as I said at the top of my presentation, just came out last night, any balances from a previously requested and obtained EIDL loan can be rolled now into the PPP loan. I'm going to guess not very many people that are that far along, because the disaster or the announcement of those monies was just on March 11th. I think that was the president's Oval Office address on that Wednesday night. It would be surprising to me if anybody has those loans yet, but maybe they work faster than they had said they would. But if you have, we can actually, there's a provision right in there that if you got the loan between, I think it was January 31st and last Friday, I'm sorry, it was actually through today's date, it was April 3rd, those monies can be rolled into a PPP loan. So that is a difference. It didn't used to be that way before yesterday, but last night that did change.
Okay, a couple more questions on PPP specifically, and then Matt, I have a few questions specifically for you as well. Do owners of LLCs with K-1 tax forms count as payroll in the PPP calculation?
Yeah, I think you can do that, because this would be in the spirit of the sole proprietorship, where you're taking the earnings out of the business, and that is some of the money that you live on. What I would throw out to you, though, is keep in mind there's a $100,000 maximum here. So you may well have paid yourself, whatever you need to live on generally, and whether that's above or below 100,000, and oftentimes the distribution, if you will, of the rest of the earnings in the form of the K-1, which is really just a paperwork way of paying taxes personally instead of at the corporate level. You could include that as additional earnings, but just keep in mind you can't go beyond 100,000.
And then a couple of questions around if you're a home-based S Corp, can you use the PPP funds to pay interest on a home mortgage, utilities, workman's comp, liability insurance, any of those things?
The only one that threw me was the interest on the home mortgage, but I'll be honest with you, what I have read says interest on mortgages, plural. I assume they meant because they're talking to, multiple businesses, but the intent would be the interest on the mortgages for the buildings that you run your business out of, which could be more than one building. So if you're working out of your home, that's the business that or the location in which you're running your business. So they didn't say in there residential mortgages or commercial mortgages. It just says mortgages. So I think you're good.
And then lastly, do PPP funds have to be used in full by June 30th or the application is open through June 30th?
The wording is for expenses incurred through June 30. I think it's probably okay that you may have made a payment in July, but it was for an expense in the covered period, which is actually February 15, I believe it is, until the end of June. So they sort of have a provision in here that it's there's a little bit of catch up in arrears thing if you want to take advantage of that. So it would stand to reason that, the expense may well have been at the end of June. Maybe you didn't get the bill until end of July, but that is if you do an accrual method of accounting, that clearly, occurred in June. So I think you're fine there.
Okay, and then Matt, let's switch over to a couple of questions. Since SBA and Treasury have decided not to include CDFIs as eligible lenders, is there technical assistance that Bridgeway and others can provide to those taking advantage of PPP?
Yeah, absolutely. So we've got both staff resources as well as accountants and lawyers that we essentially keep on retainer to help folks in all times. I think now we're repurposing those resources because we want to make sure that you're, if you're in our client set, we want to make sure you're as well positioned as possible to go and get these PPP loans from a bank. Sort of think about it like this: if you're a bank client, a business with 300 employees, you're probably going to be able to get your paperwork together and your application in pretty quick. The loan size is probably going to be pretty significant since it's based on your payroll. And so what we're viewing is, okay, how can we take that very small end of the small business spectrum and try to put those folks on par in terms of a preparedness standpoint? The loans are going to be much smaller, but how can we get you prepared as quickly as possible? So if you are out there and you think you need that kind of help, please reach out to us. Again, this is all very fluid. We didn't know until last night that we weren't going to be a lender. So we're reorienting and re-strategizing here, but please reach out if you think you need that kind of help.
And in that same vein, a lot of questions: are there any area credit unions participating in processing, or is it only direct SBA lenders that can provide this loan?
Credit unions are eligible. It will be it is up to the financial institution about whether or not they want to participate. I think most will. Some may choose not to, and so you'd have to. So I don't want to speak for anyone in particular, but if you have a credit union that you work with, or you have a credit union in your neighborhood, call them up and find out if they're working on this. I suspect that you'll see in the next couple days here folks announcing sort of their product and their application package, and it'll become much more clear who's doing this, who's not doing this, and who's really pushing it out and doing it well.
And then lots of questions around if I have a relationship with a local bank, are they the preferred bank to use to go through for the loan? And do you have to have a pre-existing relationship with a bank in order to access help from them?
I would say I don't think there's any requirement there. And Michael, feel free to jump in here. It's a relationship thing, right? So if you've got the relationship there, particularly if you're a pretty small business, you want somebody who's going to know your name and pick up the phone. But aside from that dynamic, I think you'd also have to consider who's going to process your application most quickly.
Yeah, I would add that we've hashed this around at First National Bank, and we're certainly going to take requests from non-clients. The one piece that you should probably be aware of, which is really to Matt's point, is whoever you're borrowing money from today, I would go to them, and unless they just don't do SBA processing, because they're familiar with you. They know what's going on. And even if you don't borrow, but you're a deposit customer, or you use Visa Merchant Services, or have a bank at work or employee program through the bank, they're familiar with you. They probably have, history with, the size of your deposits and your financial statements, and they're going to be most familiar with you. This process is going to be true with us, and I suspect any other bank is going to be the most efficient working with somebody who knows you well. That said, we will have a process for non-customers. There may be a few additional items that we may request just so we can get comfortable with who you are, but we intend to serve both clients and non-clients.
Okay, a couple questions about timelines. According to payroll guidelines, they should be using February to March 2019 as the basis for the PP loan. However, this individual expanded from 2 to 5 locations last fall, and their current payroll is double. Is it possible for them to use Q1 2020 as the basis, even though he's not a startup, which is the current guidelines for using 2020?
Yeah, sure. So I'll chime in here on this. What I've read is actually the words were your average payroll from last year. Our interpretation is we believe that the business owner is going to take a look at their monthly numbers January through December and then average it. There is a provision in the guidance that says if you are a new business, then you should take Q1 of 2020. If you have an unusual circumstance where you added people late in 19, but they were shown on 19, I think I would just explain that in your application. The new guidance that we got last night just said that really the burden is on the business owner to show their methodology and their calculations to arrive at what they believe to be their average payroll. And as the bank, we're not really going to challenge any of that. We just have to obtain and retain that documentation so that you're eligible, but it's not upon us to second guess your methodology. So hopefully that gives you pretty good latitude there.
And some questions about clarifications of the 500 employee threshold, that it's now 500 FTE count rather than a simple 500 head count. Can you clarify that?
Yes, so that one, I'll be really anxious for the details coming from the SBA, hopefully later today. Just like many of you have submitted questions, I have done the same thing to the SBA a couple nights ago, and I suspect my counterparts, other banks have done the same thing. Don't know if they're going to get to all my questions or not, but the original legislature that was signed did specifically say that the test for forgiveness was FTEs, so full-time equivalents. But what I saw last night doesn't seem to speak to that, and some of the documentation in terms of the application forms doesn't seem to speak to that. So this is one where I guess just sort of stay tuned and we'll see. But my advice to you is in compiling your payroll information, I would make the effort to try to understand what your FTEs are. I mean, for those of you that aren't familiar with the term, you're just taking the hours that your part-timers are working and dividing it by really it's the 40 hours a week times the number of weeks in a month, which is, I think it's 4.3. So if you do that, you'll get effectively a full-time equivalent on your part-timers. Obviously your full-timers are FTEs, automatically. But I would go through the exercise of understanding it and having kept track of it and maybe even submitted that. so that if the rules come out that are more detailed later on this and you wished you would have already done it, you would have already done it. So that's my advice. Probably go ahead and calculate it so you know what it is.
And then a couple of questions on eligibility for 501c6 organizations who aren't eligible for PPP. Do you anticipate that there will be revisions or alternative options for them to apply? They did mention that they applied for the economic injury grant, but the application asks if they lobby. And in this particular business's case, they do on behalf of members in a business trade association. So are there any alternative options for them?
The only thing I'm aware of is that a 501c3, which is different than this one, are eligible. But they don't specifically say a 501c6. So my read is that they are not currently eligible. My suggestion is that you find a way to reach out to your congressman and look for them to take care of you in the next wave. And other than that, Matt, do you have anything you can help them with?
No, we don't. We do have, we'll consider requests for 501c3s on a case-by-case basis, but don't have any money for the other nonprofit designations.
One more very specific about properties. So one person has 12 properties that are college housing and currently empty. As it stands for fall 2020 and spring 2021, they're at 30% occupancy, normally 100% because all of the schools are currently closed. Is it possible to apply for the EIDL loan per entity if they can show vacancy?
Yeah, I saw that one submitted earlier, and because the Paycheck Protection Program is payroll specific in terms of sizing, obviously that doesn't work. But I do know that the EIDL has quite a bit broader use, and if you think about it, this program is paired with the natural disaster things like hurricanes and tornadoes and wildfires and things like that. And so not only are they assessing physical damage, but they recognize it's going to take a while for people to get up and running operationally. So as I've seen some of their documentation that's out on the website for the disaster program, they're asking you to record and show historical, we'll call it revenue. So in this particular case, it would be rent. And then they'll ask you to project what you think it's going to be in the future. It's actually on one of the forms they have on their website. So that to me would be a perfect spot to illustrate, here's my story. And I believe that it's worth a try. I do believe it's something certainly within the spirit that program is intended.
So Matt, this one's for you, and then we'll do one last question. What about investments from banks into CDFIs like Bridgeway to create other funds to respond to COVID challenges by small businesses in LMI areas?
Yeah, so we've, the funds we have available currently are mostly from philanthropy. We are looking at our existing banking relationships and some programs that banks have put out there to try to increase the size, make more resources available. At the end of the day, the unfortunate thing is that if we've got to pay the money back, the money's got to get paid back to us. And that makes it less advantageous than a PPP loan. However, we, again, for folks that either don't have access to PPP loans because they don't have a strong banking relationship or the paperwork doesn't quite work out to them, call us because we do have some resources already assembled to make those loans.
Okay, one last question for both of you. What if things are status quo right now but could have problems in May? Would you recommend applying for the PPP loan now? And what's the best way to stay on top of kind of the changing environment as a business owner?
We take a shot, Matt?
Yeah, sure. I think if you've got employees that you are in a position to retain, or if you've laid them off and you're in a position to rehire, apply now. If you think problems are coming in May, or you think problems might not be coming at all, apply now. This time is of the essence with this program. I would say that, again, another theme here is that everything is pretty fluid, pretty up in the air. There's likely to be more stimulus. I think that they're already talking about a phase 4 legislation in Congress to address issues. So there might be a whole different set. They might re-up the PPP loan program. They might come up with a different set of subsidies. So you want to stay, again, in communication with all your investors. The Allegheny Conference has lots of resources. Your Small Business Development Center has resources. So keep your eyes open.
I would add that I'm reading right off of the application that got revised last night. And one of the certifications you're going to make as a borrower on this is that current economic uncertainty makes this loan request necessary to support the ongoing operations of your business. So think of that. You may be okay now, but if you have any reservation about, I don't know how long this is going to last, it sounds to me like that's economic uncertainty. And I would suggest you should have no qualms going ahead and applying now just in case. The reading I've done in the media, the different congressmen are weighing in on is that, hey, we're all curious as to when this thing's going to begin to abate. They call it the flattening out of the incident curve. If we need more money, we'll go back to the table and get more money. You are probably reading different congressmen already talking about the next iteration. And, these are designed to be 2.5 months of payroll. And, if it's not over by, you guys aren't all back to normal by the end of June, they're going to need to give out more money. I hope it is over, and I really believe it will be. But I think if I were you had any uncertainty, I would jump on it now.
Thanks.
All right. Well, thank you all so much, Allison. Thank you very much for helping to facilitate the Q&A, and a special thanks especially to Mike Amon from First National Bank and Matt Madia from Bridgeway for all the information. We really appreciate your participation this morning and everything you've been able to share with us. We will be posting this webinar and answers to your questions on our website at AlleghenyConference.org. That should happen later today. And we'd also like to remind you that we will be doing a part 2 webinar on Monday from 1 o'clock to 2 o'clock on how to help you get access to the Paycheck Protection Program funds with the Small Business Administration, and with that program we'll do with the Small Business Administration in Huntington. And you'll be receiving an invitation to participate in that webinar on Monday right after this. Also like to invite you to join us Sunday morning at 11 on Channel 11 for Our Region's Business. We're going to include Josh Shapiro, the Attorney General of Pennsylvania, who has created his own PA Care package to rally banks across the Commonwealth to go beyond what's in the federal legislation to really help to sustain their customers and small businesses across the Commonwealth, and especially their employees. So more to come on that effort just here within Pennsylvania. And again, we'd really like to thank our sponsors who are making this digital and online programming possible. Peoples, Giant Eagle, Highmark, and UPMC Health Plan. We would not have the resources we need to be able to share this kind of information through all these new channels without their support, as well as the support of the Allegheny Conference itself and our Regional Investors Council, our membership. And finally, I'd just like to thank not just Allison, but everybody at the Allegheny Conference and our affiliates, the Greater Pittsburgh Chamber of Commerce, the Pittsburgh Regional Alliance, and the Pennsylvania Economy League of Greater Pittsburgh for helping to gather the information, organize all of this, so that Allison and I are able to share it with you. And again, have a terrific weekend. Hang in there, and we hope to see you again, if not on Sunday, certainly on Monday afternoon. Thanks a lot.